Hi everyone, this is Jamin Kirkwood from Secure Financial Management with your May 2016 Economic Update. In this video, we'll talk about some of the economic headlines that influenced markets last month and give you some insight into what they might mean for you as an investor. Please stay tuned at the end for a required disclosure statement. Well, the S&P 500 managed to advance about 0.25% in April, as many companies beat earnings, revenue forecasts, and some important commodities posted remarkable monthly gains. Existing home sales rebounded, and manufacturing seems to have recovered from its winter slump. Hiring continued to impress, but consumer spending and confidence figures did not. All in all, it was a relatively calm month, absent of much of the volatility we saw in the first quarter. In domestic economic health, early April saw the Labor Department report a net gain of 215,000 jobs in March, placing the average monthly net job increase at 209,000 for the first quarter. Since the labor force participation rate rose slightly in March, the unemployment rate ticked up to 5%. The U6 rate of unemployment, which includes the underemployed, rose 0.1% to 9.8%. By initial estimates of the Bureau of Economic Analysis, the economy had grown only about 0.5% in the opening quarter of 2016, and that sluggish growth was underlined by the March personal spending number. The Commerce Department reported a dismal 0.1% rise in consumer spending in March, but consumer incomes did grow by 0.4%, which continued a recent trend. In global economic health, as April drew to a close, the Bank of Japan decided not to bolster its economic stimulus. Now, that decision both surprised and disappointed investors, who figured that additional measures were at hand. With annualized deflation of 0.1% measured in March, the Bank of Japan pushed back off its goal of reaching 2% inflation until 2017. Elsewhere in Asia, China's central bank made its biggest yuan rate move in 11 years on April 28, sending the currency about 0.5% higher in one day as the US dollar index reached its lowest point since June of 2015. Looking back and looking forward, the first quarter's earnings season looked better than some analysts had predicted. While some of the tech giants disappointed their shareholders during the month, only 15% of S&P 500 firms missed their earnings goal, which is lower than the historical norm of 24%. Additionally, 73% of S&P 500 firms reported results which surpassed their earnings forecasts, which is higher than the historical norm of 66%. Investors thinking of selling in May and going away may want to reconsider, given the recent climb of commodities, the rebound in manufacturing, and the continued strength of the labor market. As we look forward, be aware that June could be a more tumultuous month than May. The United Kingdom will vote on whether or not to remain in the European Union, and the Federal Reserve could make an interest rate move. While Wall Street's solid rally back from the February lows has subsided, negative sentiment has not yet crowded out the bulls. Last May, stocks hit record highs. With some luck, they may approach them again. That's it for the May 2016 Economic Update. As always, if you have any questions or concerns about what we've discussed, please give our office a call at the number below. Once again, this is Jamin Kirkwood with Secure Financial Management, signing off for the month of May 2016. Please remember that nothing we discuss here should be considered a recommendation. If you would like to discuss your personal financial situation, please give us a call at 210-428-6250. We'd be happy to speak with you.